Today's setup is going to be a simple demonstration on what exactly is happening with Bitcoin and what exactly I'm targeting when I'm using ICC. So to remind you guys, this is a self-documentation. I'm applying a online method that was, brought into the spotlight like around the beginning of this year, last year, by Trades by Sai, and it's called ICC. I'm going to scratch all this and then we're going to go from there so that way you guys can follow me step by step and what exactly we're looking for in order to create an A plus setup. Or I wouldn't necessarily say create, but to find those A plus setups and when they present themselves, we're able to apply ICC and to come out on top and win trades, right? And not specifically just any trade, like really good trades so that you come out every single time, right? Now, I'm not the founder, I'm not the creator of this fucking method. And so I do have a lot of gaps when it comes to my trades, and I have to be honest, this is a reminder of self-documentation. So it's not perfectly, like, I'm not the teacher here, I'm the student, I'm the apprentice, right? But I want to give you this channel. This channel is basically proof that you can pick up something online, you can devote yourself, you can apply discipline every single day. And if you never fray away from it, if you're never too scared, if you always put your best foot forward and apply yourself every single day, you will come out on top, right? I've made 3 trades the past 2-3 weeks, which I didn't document at all. So I'm just going to skip those entirely because I don't want to do any back testing right now. We're just going to get straight into the video as of current price action. So Bitcoin's currently sitting at 64K. You can look at this entire, by the way, this entire visual is already mapped out. So when this video ends, just come back to the very first couple minutes and you can see exactly what I'm doing and you can understand like, oh, he erased all of this. He went through the whole spiel. Now here I am back reviewing the whole demonstration or the whole illustration and it all makes sense, all right, according to him. This is where I'm also going to be applying myself personally. Like when I say that, what I mean is I use this specific market, this specific chart, the specific platform, yada yada, to do all my trades. So the first thing I always do when it comes to ICC, when it comes to looking for my trades, right? If I want a winning trade, first thing I do fundamentally is I want price to show me that it's ready to make a good trade. If it's not ready, I'm just going to prepare myself to where I can see the obvious things. So one of the first rules now, this is all preference, but this preference helps me apply myself with leverage. Leverage meaning higher probability trades. First thing I do is I always take the obvious trade. Now, just because it says that, like, trust me, I've made the mistakes of not following rules. I promise you. In fact, there was one trade that happened like a day ago. Like, I'm not going to run away from it, but basically, like, I didn't get the green light on a bunch of stuff, which I thought I did, and then it turned out to be wrong. All right, and that's because I didn't follow my rule. And I'm saying this because it can happen to anyone, but it doesn't mean you should revenge trade. It doesn't mean you should go full tilt and then just toss all your money in, and that's the end of the world. It just happens. This is a probability game. And that's the second point I want to make, is that nothing is guaranteed. And these 2 rules you can apply under any position, as in you could be any kind of trader, right? Even a scalp trader. Like, if it doesn't show up in your face to where it's obvious, why do you want to take that trade? And the reason why we end up taking it anyways is because that human side of things starts to speak out. Oh, I haven't done a trade in 2 weeks. Oh, this looks sketchy, but I can make 5 bands off this. Like, that's the human side of things. We're always hungry for a kill, and that's also how the market attacks us, right? Because it knows what we want, and it's always going to do its own thing, and it's just going to run you over if you're not paying attention, and if you're just not playing the game for what it gives you. So knowing these things, and I'm just going to pin them, I'm going to now apply myself to the market and see exactly what is obvious. So take what you can from this, but also understand this isn't everything. Like, this is just how I go day to day, but there's also little things that you need to pick up from Sai's course, right? You need to pick up everything from Sai's course so you understand the back end of things, because everything that price is doing here doesn't always mean every single rule is being applied. Like, there could be market news, I'm not going to back test, like things like that you need to keep in mind. So we're not applying every single nook and cranny into this. We're just doing what makes sense in the meantime, based off of what we learned, based off of what I learned. So what I always like to do is, the first thing I do every single time is stick to the 4-hour time frame. I don't care what I'm looking at. If it wasn't Bitcoin, first of all, if it wasn't Bitcoin, I would only be looking at gold and what's this called? The S&P. That's all we'd be looking at. But the thing is, I don't trade S&P and I don't trade gold. I only trade Bitcoin. The reason why I said that is because you only look at things that have a crowd, or basically volatility. I say a crowd just to make it sound easier, but you need things that already have a massive amount of people in it, right? A lot of noise. You need a cafeteria and not a library. With that in mind, I'm looking at Bitcoin because I know that even though crypto is dog shit right now, there's still a lot of volume in it. There's still tons of activity. You can trade Bitcoin anywhere in the world. You can use perps with Bitcoin anywhere in the world. So it has a lot of attraction. Not just because of that, but also because of, institutional buy-ins, long-term investors, things like that, right? And then you have your average traders. So with that in mind, Bitcoin is valuable to me. I'm going to make the trades on Bitcoin. So the first thing I look at is the 4-hour. Doesn't matter which chart it is, it's the 4-hour. And then I hop over to my tool that I always use for every single observation I make, which is called the rectangle. You can pop it into your trading view platform if you want. It's basically something that I think like almost every trader uses. It's very common, right? And then I look for the swings. I look for the current swings within the past 2 to 3 days that actually matter. When I say actually matter, it is the new swing high and it is the new swing low. It is the most recent prevalent swings that are occurring. What I can see from here, and I'll go ahead and make a visual. Like, I'm only really paying attention to everything past this. And then everything from this point on, to me, is just one big arrow. Like, everything's moving in this direction. Make a better visual. Everything just looks like it's moving in this direction. First 5 seconds, I see that. First 5 seconds, I pop out the rectangle and I start marking my swings. And you'll notice with Sai, like, I'm going to start digging into the little things so you guys have a clear picture of what you're looking at. Like, bro just pops out rectangles above the candles, and that's perfectly healthy. Like, normally you'll have the wicks, and then you can use the other end of the rectangles to mark the end of the wicks for reference points. If there's no wick, then there's no wick. I just literally make a zone. I make an imaginary zone that just has a clear idea of where price could go if we saw indication. I hope that makes sense. So I mark out my swing high because this is a swing to also make a easier visualization. This is a swing high, right? Because this is where price is at the top. Where's price at the bottom? We don't know yet as of this current price action. We don't know where price is going. It's just wobbling in this area so far. When we're looking for a swing low, we're doing the exact thing we did up here, but on the opposite side, the bottom side. And I marked this area because this is what caused this entire spike. This is the current newest support zone, because anywhere under here, there was a support zone, but it was lower. But this one's the current recent one. It's the obvious one, to put it simply. Like, don't get too complicated on it. So I says, keep things very simple. This is as simple as it gets. This is what's made, not this one up here. If you're looking at the 1 hour, this one's probably more important to you. I'm looking at the 4 hour strictly. I'm saying, this is so fucking obvious. It made this entire Drake candle all the way up here. We'll take that. Okay. Mark the obvious zones for the swing highs, swing lows. Now, what is the macro trend telling me? Not that this is preference. Not that it matters to every trader out there, but I like to see where price is heading. At first, this was the last consolidation zone because price was like a pinball just going back and forth in this area. And then it made its indication and then it zoomed back up, right? So current trend after this happened is telling me that price is actually breaking out and creating an uptrend. Is this like where it's always going to be going? No. What do I mean when I say that? Is it going to keep moving? It looks like it. Like, look at this. It looks like it's going that direction, right? That's because we want to use that momentum. We want to use the structure to imply to us the direction of the market, where the market's going. But it doesn't always do exactly what we think, because why? Because nothing is guaranteed, right? And it's a probability game. You're just working with what you got in front of you. Now, because I know that price is heading in this direction, I know that the 4 hour or hell, the daily is at an upward trend. You didn't even have to look at the daily, but to make it simple for you guys, like we had this ambitious low, then we made a lower high, then we made a higher low, then we broke out of that and made a higher high. This does not constitute a bullish trend. At the same time, on the 4-hour, it looks very bullish, doesn't it? Because we're starting to move up. Everything on a macro scale, like weekly, daily, it still looks shitty. Like price is still going down. Okay, that's a granted. Like weekly made new lows. That's a granted, right? So knowing this, I'm gonna set up what I believe are scenarios that could happen on either end, because price is very neutral to me. It could go up, like this could be the start of something, or it could continue falling, which is the more logical approach if we're looking at the daily and the weekly. So where does that hold itself? Like what exactly am I trying to present right here? And it's that number 3, you should always look for opportunities for both trends. So whether it is, I'm talking slow, but I'm gonna speed this up so it sounds a lot faster on YouTube. So what does that mean? It means is if price decides to build up, we want to attack the long position. But if price wants to continue building down, we already know that Bitcoin's doing shitty overall. It's doing a terrible job, right? So we're looking at major support levels, aka the swing lows, and we want to see price just break down and break through support levels and then confirm those breaks, and then we target zone to zone. What do I mean when I say a zone to zone? This box is a zone. I'm marking the swings are zones, essentially. Psychological level 70k, 65k, 60k, they're zones. We're targeting the next zone. I'm eyeballing this right here because this is what caused all this. This entire area on the daily and weekly, it's just a couple wicks. On the 4-hour, because we're only using 3 time frames for the majority of the time, this is the next zone, right? And then right underneath this is 60k. Does that make sense? So we want to see the indication, because this entire spiel right here is technically a consolidation zone. What we do want to see is confirmation that trend no longer wants to float. It wants to dive. Or if we want to go up, trend no longer wants to float. It wants to dive, right? Why did I mark? You guys might be questioning, when I was longing, why did I just mark up to this point? Because this is the current swing high. This point is far from this point. Like if price continues to break through, this is the 4-hour, and it breaks resistance levels, right? It breaks resistance levels, 4-hour decides to correct. Let me create an illustration. 4-hour decides to correct, and then we align all the time frames. We would target this next zone. The 15 minutes of 1 hour would give us a juicy ass fucking stop loss area, and then we would just target that zone. So it would probably look something like this. It looks pretty like tight, right? Like, oh, this long position looks so risky because of how tight it is. Well, to be honest with you, if everything aligns, then you have to trust the trade. And when you're getting in and you want to play time frame correlations, because that's the rule, then you can always use the 15 minute or the 1 hour. If you're targeting this zone, you're likely using the 15 minute. Price action should support the movement all the way back up, because we're using the momentum from here to retarget this high. Therefore, the chance of it chopping back and then sweeping your stop loss before coming back up is still possible, because it's Bitcoin. Bitcoin is still speculative. But under any scenario, generally, under a probability standpoint, you take the 15 minutes to 1 hour stop loss. Like you see how I made this illustration of price? Let me make it look cleaner, actually. So this is the 4-hour, and 4 hours is going to be bulkier than the 15 minute 1 hour. But let's just fast forward and build that indication correction. So it's going to look choppy, and see how, I'm just going to do the whole thing. See how price ends up correcting here? Like if we know price is correcting here, we know this is the support zone for the 15 minute 1 hour, right? Because we're confirming all the time frames before we get into a trade. Then we enter into the indication range. Our stop loss is right under the zone in which price is supporting. This becomes a support zone for price for it to push up. That's where we're going to set our stop loss. I think that's enough said there. Like, it's as simple as that. So that's my justification for retargeting the swing high. If price decides, if you want to wait it out and be more conservative, that's obviously always the smarter play. You can definitely wait things out and say, I don't want this trade because I still deem it as the consolidation zone. Sure. You're perfectly, you know what? You are the trader. Do whatever the fuck you want. Don't have to follow it through all the way. But if you think that it's just gonna reject here, or if you don't want to get into a play until you see a very obvious indication of it, like let's say it does all this of it being up here, sure, it's still bullish. And it'll probably still pull back. And then it'll probably go up even more to the next zone, which is probably gonna be up here. Or the next psychological zone. Power to you, bro. Because guess what? You can still get in on an attractive trade here. Like, no one's stopping you, bro. You see what I mean? So it works regardless. But remember, at the end of the day, it's a probability game. So my mindset is there. So I think I already went over the bearish. If it drops, it goes lower here. Right? That's bearish. If the 1 hour, because we're on a macro bullish scale, what I mean when I say that is on a macro scale, price is supporting the support zones every single step of the way. So we're going to continue with the momentum and then retarget the high. How do we retarget the high? We scale into the 1 hour and we target the high as soon as time frames correlate. I think I made it pretty simple enough. I don't have to explain any more of that. So that's the current price action that is going to develop in time. Now, consider this. I'm not going to make it a rule, but rule number 1, always take the obvious trade. If you see something that looks like a B+, do not be afraid to miss the trade. We have tons and tons of time, tons and tons of opportunity to get into the next trade. Don't fucking be disappointed you didn't get into a trade, right? And we're all trying to perfect our craft. And the passion in this is, the work in this, as good as it is, like tied to rule number 2, even if it's an A+ setup, let me show you an A+ setup. Even if it's an A+ setup, you could still, because the world happens, because news, because algorithm, who gives a fuck? You can still miss out on trades because why? Nothing is guaranteed. Like, it could do this. I'm not fucking joking. Price could completely destroy your entire thought process on trading, and it could do that. And that's where 80 to 90% of people who get into the market and try to trade don't realize, like, this causes emotions. This makes people lose money. People start to think emotionally. Shit like this is realistic because it's included in the probability. I think every time I make a video, like 80% of it is me explaining the psychological points because it's true. You got to deal with the losses. If you don't accept the fact that price might not get to your point, or let's say this is what you're going for, a 2.5 is still pretty damn good, but let's assume you got in early because you saw a good setup, right? So let's say it does this and you get in here. Like, it could look good, and then all of a sudden you get swept out and the news pops up and all of a sudden you're back to it being real good. Like, that's the state of the market. Anything can happen. I'm just going to end the video off there. So I hope you guys understand I hope you can take away from this, recap, you could say. I hope you could take away from this explanation that I made what I am looking for when it comes to price action on Bitcoin as of currently. And yeah, we're going to see what happens from this point on. I mean, whatever happens, always accept what happens, because you had the perfect setup. You look for the perfect trades. You always skip the bad ones. And if it doesn't happen, it doesn't happen. So that's the mindset of someone who wants to be a successful trader. And I hope I made valid points in this video so you guys can understand a thing or two when it comes to ICC. Big shout out to Sai. I mean, this stuff is pretty simple, and I use it the way I do while applying the truths, the foundations to it. So that way I can compete in the market and come out on top. Hopefully you do too. So yeah.